Good morning, everyone, and a very warm welcome on this Sunday morning. Today, we are having a very important topic, that is the corporate social responsibility. To deliberate on this topic, we have with us CS Kalidas Ram. He will be explaining the topic, although it has been a little old law, but still there are a lot of confusions, a lot of interpretations. So he will be guiding us on the same. Before we start the meeting, I request you all to please stand up for the Institute motto song. Thank you, everyone. After the tribute to our alpha mater, please keep standing for the national anthem. Thank you, everyone. A reminder, everybody, please keep your phones in silent mode. To introduce today's faculty, I would like to call CA Ankush Gupta ji, who is also a core group member. Ankush ji.
A very good morning to everyone. Today's speaker, Shri Ramaswamy Kalidas sir, is a very senior company secretary with more than 4 decades of experience in industry. He has worked in leading companies such as Ambuja Cement, ACC Limited, and Reliance Power. He was a visiting faculty in XLRI Jamshedpur, a premier management institute, taking courses on corporate law and governance. And he is also a regular speaker in seminars and conferences organized across the country by professional bodies. He is presently member of the expert committee on secretarial standards. He is author of many books and more than 100 articles on issues relating to corporate law, SEBI regulations, and corporate governance. With this small introduction, I would like everyone to welcome him with a huge round of applause. I would also like to invite Mr. CA Kaushik Javeri, sir. CS Kaushik Javeri, sir, to please present a memento to our. Sir, please, sir.
The presentation is here, no? Yeah. Yes. Yeah. Good morning to all of you. At the outset, let me extend my grateful thanks to the organizers for having me here. In fact, I recall that I had addressed this very forum some 6 years back. No, not 6 years back, a little more than that. I think 2014, in the onset of the Companies Act of 2013. And those were my, initial years in Bombay, because I'm not a Mumbaiker, in the sense that I came to Mumbai basically for extension of my career in 2010. And I believe you me, I was absolutely amazed by the response that I received. Calcuttans are very laid back, typically in comparison to Mumbaikars. Here there's a huge appetite for learning, and there is nothing which is better manifested by an assembly such as this on a Sunday morning. I mean, people would be like to discuss IPL and things like that, but here there are people, diehard professionals, that want to discuss something as dreary as the CSR provisions, right? So in fact, I rather like, I'm an old timer also, in the sense that, trying to sort of deep dive into any provision of law fascinates me to no end. And this is one example of the law on the subject. The CSR is an extremely contentious issue, which has opened up several vistas for interpretation. And where it comes to chartered accountants, basically I have tailored this presentation in a manner so that we don't sort of get bogged down into the procedural aspects of law, because you are not going to draft resolutions for CSR committees and things like that. And I would rather prefer a discussion on issues which are more intimate to the profession, such as what constitutes expenditure. I think there is a nonsensical concept which has been thrown up by the MCA, where it comes to what constitutes expenditure. Inexplicably, in spite of the fact that accounting across the world is on accrual basis, CSR accounting is on cash basis, in the sense that if you spend any money through an intermediary and the intermediary does not give you a confirmation of the spends, the difference between what you have spent and what he has spent as per his account is constituting an unspent amount. So we will discuss what constitutes expenditure based on certain Supreme Court decisions, and try and understand, deep dive into the law more from the point of view, and then the iniquity in the law. Of course, where it comes to spends, you spend money blissfully, unaware of the fact whether the money is being really used for the purpose which is intended. You write out a check in the name of the Prime Minister's PM Cares Fund, and that's CSR for you. Because nobody is going to ask the Prime Minister, or you are never going to be able to ask the Prime Minister, sir, give me an account of what you have spent. But you can very well ask an intermediary, and the intermediary says that he has spent only so much. So your limitation is there to the extent that you cannot book an expenditure beyond what he confirms that he has spent. So there are certain iniquitous positions in the law, and there is also an the retrograde aspect which we shall discuss where it comes to making the law applicable to startup companies, which makes the law kind of tenuous and retrograde, because after all, what you should try and tax or rather burden a company is a company which is proven, which has a sustainable track record. And then I will also raise questions on this concept of profitability by the accounting convention, whether that can be applied justifiably for every aspect of CSR. Having said this, let me go into the subject, and the subjects disappeared. Well, I think I'm quite comfortable doing this.
Okay. So let me check.
Yeah. Also, you. हाँ यही तो प्रेस किया था. Okay, ठीक. Okay. Upper one. हाँ ठीक. Okay. Any law, any aspect of law is better understood by going through the evolution of the law, the purpose of the law. In fact, they say that understanding law becomes much easier when you try to go through the genealogy of the law, as also try to understand the intent and objectives associated with legislation. So CSR as a concept, I mean, was introduced, was mooted. The idea of having CSR as a statutory provision was mooted way back in the year 2009 in India. And in fact, this was on the basis of there was a recommendation by the Finance Committee on the Companies Bill 2019. In fact, it was felt for a long time that the Companies Act of 1956 had outlived its shelf life, in the sense that it had become antiquated, and therefore there was a feeling that you should have a modern law which is contemporary and also caters to the dynamics of an economic environment, which is very different from the economic environment that prevailed in India prior to 1993. Now, but as a concept, CSR was, the evolution goes back to the 1960s, when world over, when it was felt that a corporation, a company, is actually, we are aware that the company is a corporate citizen. It is not a natural person, but it is a citizen created under law. And a company takes so much out of society in the form of natural resources, in the form of human capital, in the form of financial capital. It taps so much out of the environment. So there should be necessarily an arrangement, a kind of a quid pro quo, whereby a company which spends, which uses up natural resources should have an obligation to pay back to society. And therefore, the company should do some good for the benefit of the society. And you cannot be very narrow when it comes to determining the qualitative aspect of a company by judging it on the point of view purely from the standpoint of profitability. So there was a clamor that a company owes it to society. There are certain societal obligations that a company has to discharge, apart from taking care of its primary stakeholder, which is the shareholder. Now, that was a concept which was not universally accepted. There was this Nobel laureate economics, professor who championed the cause of free market economics. He said that CSR, corporate social responsibility, is anathema to a corporate. Why? He felt that the primary responsibility of a corporation, because of the fact that it has raised capital from the public, the primary responsibility of a corporation is to cater to the interests of the shareholders. In other words, he put forward this theory of wealth maximization. And we said that, I have the responsibility only to take care of my shareholders and no one else. In fact, he said that corporate social responsibility is the highest act of irresponsibility. And that was a very extreme view, which was not accepted, unanimously. And there was a debate, and then it was felt that this is a very, very narrow perspective of judging a company, and CSR as a concept evolved. And in India, it was felt that we should have CSR because you see, like, why do you have law? Firstly, we need to understand why we have law, because there are two sets of, there is a beautiful theory on human behavioral, there is a human behavioral hypothesis by Douglas McGregor. When he wrote the law regarding human behavioral hypothesis, he said he propounded two theories. He's called one theory as theory X, which felt that as a man by nature is indolent, he's indisciplined, he is not going to obey others. That was the perspective that was put forward by theory X. Now, theory Y was the opposite. Theory Y said that man is very obedient, is very law-abiding. But then, in terms of, it was found that empirical evidence suggested that theory X was probably more, viable in terms of, because that was the behavior of man. The universal behavior suggested that unless man is prompted into some kind of a disciplinary regime, which is pushed through his throat by the force of legislation, he's not going to listen. So therefore, law is absolutely essential to ensure that there is rationality in human behavior. And we believe that nobody is going to comply with law unless there is a carrot and stick, right? That was the psychological aspect that went into lawmaking. Oops. ठीक नहीं है यार. Okay. Now let's look at the development of the law. Section 135 was introduced from 1st of April of 2014, and there was Schedule 7, which sets out the types of expenditures that has to be incurred to be considered as CSR. That was also issued around at the same time, and the rules relating to CSR were also promulgated in 2014. Now, lest you assume that the government of India suddenly thought that it was very, very essential that corporates should collaborate in nation building, let me tell you, CSR in its original form had a lot of political innuendos. In this country, lawmaking is more influenced by political decisions as opposed to the ground realities. If you looked at the original Schedule 7, you will see what I'm trying to say about political innuendos is absolutely correct. Because if you look at that schedule, it first provided that, today you can get CSR benefit by spending certain money for central funds, government of India funds, where you like the Prime Minister's fund or the COVID care fund and things like that. But when Schedule 7 was introduced, there was one avenue available for the states to raise huge amount of revenue. And that was if you contributed to a state-sponsored fund, state government-sponsored fund, and the fund was intended for the upliftment of backward classes and scheduled tribes, that also qualified as a CSR expenditure, right? Now, taking a cue from that, the first government to act with great amount of alacrity was the government of Chhattisgarh. That point in time in 2014, Chhattisgarh was ruled by the BJP. And the Chief Minister of Chhattisgarh announced a slew of schemes and funds for tribal development in his state and mopped up huge amount of revenue from the corporations that existed in Chhattisgarh. And Chhattisgarh was a new state, and because of the division of Madhya Pradesh, it so happened that most of the cream of the industry fell within Chhattisgarh, and there was a huge amount of fund which was mopped up by this process. Immediately, Mr. Sachin Pilot realized that what he had in mind by way of mopping up resources for the central funds was being sort of taken away by this initiative. Schedule 7 was immediately amended to say that this benefit will be available only to central funds. So please do not assume for a moment that the government of India was extremely noble and sort of it considered it as a sacrosanct requirement that corporates should also contribute to nation building. So the political innuendos were very, very, in fact, I remember a joke which Mr. Anil Ambani, mentioned when I was in Reliance Power. Sachin Pilot, if you do not know, is married to Sheikh Farooq Abdullah's daughter, right? And apparently, Mr. Ambani was very friendly with Farooq Abdullah's daughter. And he asked her, how is Sachin doing? Then she said that Sachin's fine because he's enjoying his affair. He said that how as a wife you can enjoy your husband having an affair? No. He's having an affair of different sorts. What is the affair? No, he's been given recently he's been given the charge of the Ministry of Corporate Affairs. So therefore, he's enjoying his affair. So what I'm trying to say is that all along from 2014, you've seen that the Act and the rules and the schedules have been tinkered with consistent regularity because you have not found yet the objective behind CSR. In fact, it is ironic that the amendments which were introduced in January 2021 were kept in cold storage for 2 years, 2019 and 2020. These were under the Companies Amendment Act of 19 and 20, and they were introduced only in 21. So it is clearly indicative of the indecisiveness with which the government has operated where it comes to this law. Now, having said this, let's make a deep dive into the topic, into the law as it were. Now, what are the implications? Section 135(1) is the charging section. I mean, in the sense that it says that what is the threshold for you to become liable to CSR spend. And there are 3 conditions, as you are aware, which have been put forward in 135(1). You are liable to, 135(1) does not talk about the liability to spend. It only talks about the need for you to set up a CSR committee. Now, the CSR committee is a requirement if A, your net worth is more than 500 crores in the preceding financial year, or your turnover is 1,000 crores or more, I repeat, in the preceding financial year, or your net profit is 5 crores or more in the preceding financial year. Mind you, these 3 conditions are mutually exclusive. And if you are satisfying one of the conditions, you are liable to set up a CSR committee. Now, that gives rise to a question. What would you do? Okay, you satisfy the requirement of the turnover, or you satisfy the requirement of net worth, but you do not have a profitability. But yet you will have to set up a CSR committee. And I assume that in the absence of any fund to spend, the CSR committee will only twiddle its thumbs. Actually, the requirement should have been that the CSR committee should have been a necessity only if you had that profitability, right? So this is but mercifully, what has happened is that they are now talking about the preceding financial year, so which takes away the retrospectivity that was originally associated with the concept. Previously, the section talked about any financial year. Now, any financial year meant, the section was introduced in 2014. So any financial year could mean that you could go back to beyond 2014, and the MCA confused the matter further by saying that any financial year, they issued a circular in 18th of June 2014 to say any financial year meant preceding 3 years. That means if you had a net worth of 500 crores in the year 2012, you had to set up a CSR committee, right? Now, as you are aware, no legislation is intended to be retrospective unless the intention to make it retrospective is manifest in the objects and intents of the legislation. Now, I remember when this came, I wrote to the office of the Prime Minister and I said that, believe me, I wrote it. I'm not saying that what transpired was because of what I wrote, but for the first time ever, in a matter of 2 days, I got a response from the Prime Minister's office to say that your submission, I said that this cannot be correct, because at that point of time when I was in Reliance Power, you need only the ROCs only need a little bit of encouragement from the government. Immediately, there were a slew of notices which were issued to many companies. Why you have not set up a CSR committee? I remember in Reliance Power, we had set up a subsidiary which had, because of the issue of capital by to the holding company at a premium, a net worth beyond 500 crores. But the subsidiary had not started production and it had not set up the power plant. The registrar wrote that you have not complied with CSR by setting up a CSR committee in 2012. So you should please explain, show cause as to why action should not be taken. So I wrote to the Prime Minister's office and said that this is not correct. And in a month's time, we got a response to say that it will be attended to. And lo and behold, the law was amended in 2018 to substitute the words any financial year by the previous financial year. So this is one instance of the government of India listening to the public, So now the charging section again now says that you have to spend 2% of your average net profits for 3 years, right? That presumes that you should, as an organization, be in existence for 3 years, right? But unfortunately, that has been belied by the fact that now there is an amendment in the law effective from January of 2021, which says that even if you do not have the track record of 3 years, even if you are a startup, if you are in existence for 2 years, or for that matter, 1 year, and if you have a profitability of 5 crores or more, in that case, you will necessarily have to spend for CSR. Now, that I feel is extremely unfair, given the fact that all businesses are to be judged in terms of sustainability. You have to find out whether a business is sustainable, and that sustainability is a test which you apply over a period of 3 years. I mean, the period of a business cycle. So if you say that I have made profit from year 1 and make me liable to CSR, to my mind, that's retrograde. Because profitability, again, under the accounting convention, to my mind, has a limitation. Because profitability does not distinguish between profit that is sustainable and one-time earnings. You can, unless, of course, you are a very, very, efficient company which wants to see the chalk out of the cheese and want to show sustainable earnings separately and non-sustainable earnings separately as extraordinary income. You do not normally, the lesser managed companies do not want to sort of bifurcate. So suppose you have a profitability which is arising from a one-time activity, such as the disposal of assets, that's also profit. So you'll have to use that for the purposes of CSR. To my mind, it is retrograde, and therefore I would have felt that CSR should have been made applicable only to those companies which have survived a business cycle of 3 years, and you cannot burden a startup or a nascent company which is just finding its ground by the impost of CSR. And now, then they are talking about a 3-year average. How do you apply a 3-year average to a company which is not 3 years in existence? So if you have got a 2-year average, then you will have to apply 2% based on 2 years profitability. Or if you are 1 year old, that 2% will apply on that year's profit, which is different from what the law says. Okay. So therefore, as I said, even if you don't have profitability, you will have to set up a CSR committee. So eventually you might have a CSR committee which is talking about the weather in Bombay because they don't have anything to spend, right? So criteria, to my mind, should be sustainable profitability alone. Okay. Now, then the next question is that a lot of discussion has centered around in the fraternity where it comes to whether CSR was a legal obligation from day one. Because the feeling is that CSR has become a liability, a legal liability, or it is mandated only from the amendments made in 2021, primarily because A, there was no penalty prescribed under the original section. It's only 135(6) which has been introduced, which talks about today the imposition of penalty for non-spend of CSR amounts or for failure to transfer any unspent amount to the CSR. So therefore, a feeling was that if you did not spend on account of CSR up to the years 2020, you simply had to explain, either explain why you did not spend, and there was no penalty. To my mind, that is incorrect. That was basically that's an incorrect assumption. Why? Because although no specific penalty was provided under Section 135, we are aware that under Section 450, if the law says that no specific penalty has been provided, the penal provisions under Section 450 shall apply. So the penal provision under 450 was applicable. Why? Because, the obligation, this is because 135(5) says every company referred to in Section 135(1) shall ensure that. You know that the word shall in legal terminology suggests a compulsion. There is a difference between shall and may. Of course, in many situations, the courts have used the two expressions interchangeably. Shall is supposed to always contain a mandatory force. On the other hand, may is supposed to provide a discretion where it comes to applicability of the provision. However, there are certain situations where the courts have held that even may carries a statutory compulsion, particularly if the non-compliance of that provision is going to end up in defeating the purpose of law. So therefore, to my mind, the theory that CSR was not a statutory obligation from 2014, I wish to dispel by saying that 135(5) made it mandatory, notwithstanding the fact that there was no specific penal provision. Of course, now there is a specific penal provision, as I said, in the form of 135(6). So the perception that the penalty was liable only from 2021 is wrong. January 2022, 2021, to my mind, is wrong. Okay? Because the rule now says that the activities have to be undertaken in pursuance of the statutory obligations. In pursuance of the statutory obligations under 135. That is Rule 2D. As you know, rules can never surpass the Act. So the Act clearly said that there was a liability to spend for CSR, and the CSR was therefore a statutory obligation from day one. Now, as I said, this applicability of the charging section, namely 2% spend, this imposes an unconscionable burden on the startup companies, on the new companies, and you should, make it liable. These companies should be made liable only after they have lasted a period of a business cycle, as opposed to, because, in a business cycle, you typically see three situations where there is a slump followed by a recovery, and then you ride the crest of a wave. That is when, the graph plateaus after a period of 3 years, because you cannot be imposed a burden when you are riding the crest of a wave. Okay. So this, and then the fact that you are supposed to spend 2% on average profit, that is dispelled by the fact that you have to pay for CSR from day one if you are answering that yardstick of 5 crores of profitability. Now, there is another important change in the law which has happened where it comes to the liability for non-compliance. Originally, the section provided for a fine. In fact, fine has now been substituted by penalty. Now let's understand legally what is the difference between a penalty and a fine, because very few people try to understand the technical difference between what is a fine and a penalty. Now let's understand firstly, the penalty is very huge, and after these adjudication proceedings have come, the trigger-happy ROCs, I hope there is nobody from the ROC's office here, the trigger-happy ROCs are imposing penalty left, right, and center on companies for non-payment of for failure to spend or failure to transfer money to the the unspent account. The penalty is on the company is supposed to be twice the amount that is required to be transferred to the fund, or the unspent amount, or 1 crore, whichever is lower. That means if your obligation is X, the penalty will be twice X, or if you have not spent fully, the unspent amount will be twice of the unspent amount, or 1 crore, whichever is lower. 1 crore is a very hefty sum of money, right? And where it comes to the persons who are responsible, this is the liability on the company. What about persons responsible for the default? The persons responsible for the default in the form of the company secretary, the directors, the KMPs, etc., they will also be liable to a default by way of a penalty, which will be 1/10 of the amount that is to be transferred or spent, or 2 lakhs, whichever is lower. Now, 2 lakhs is also not a small amount of money for an individual. Now, previously, fine was imposed. Now, let us understand what is the difference between a fine and a penalty. The term fine has been substituted by penalty by the Amending Act of 2022. Now, what is the meaning of the term fine? Fine has been defined under Section 40 of the IPC to mean a pecuniary punishment for an offense. It's a financial deterrent for an offense which you have committed under the law. Penalty need not necessarily be for infraction of law. Penalty can also happen if there is a breach of a condition in a contract. If there is an agreement which the two of us have agreed, and if there is a breach of a condition, there can be a penalty clause in the agreement by which penalty is impossible for not complying with a condition in the contract. Now, under the criminal law, of course, the penalty is levied under the criminal law for any infraction of law. Like, for instance, you jump a signal, you pay a penalty. That's because you have infringed the law relating to traffic. Similarly, you park in a wrong place. Of course, most of the time, you don't end up paying penalty to the government. You end up paying to the chap who comes and stops your car, right? That's a different matter. Now, penalty is recoverable in a civil action as a penal measure. It can be recovered by the court as a penal measure, and the extraction, sometimes the penalty is not necessarily compensatory financial, meaning that, you see, a fine is supposed to restitute the aggrieved person financially to the extent of the loss he has suffered. But as you know, under law, penalty can also be exemplary. if the penalty, even in there are cases where the courts have levied penalty, which is far in excess of the financial loss suffered, because they want to set up something as an example to deter non-compliance. Like for instance, if somebody is engaged in an immoral activity, or, the penalty can be humongous. It can be many, many more times than the loss that he has caused to the exchequer. So fine is never a penalty, because what is levied as a fine goes to the credit of the agency or the authority imposing it. On the other hand, penalty is different. It goes to the credit of the lawmaking authority. And as you know, as chartered accountants, there is a difference between in the tax treatment, there is a difference between the treatment of a fine and a penalty. You can never claim a penalty as in the tax proceeding if it is in infraction of law. On the other hand, if there is an additional fine that you have paid for filing a return belatedly, you can still claim it as a business expenditure, but not in the case of a penalty, because it is basically infraction of law. Now, CSR committee, as I said, 135(1) says that if you satisfy the financial thresholds laid down under the section, then you have to set up a CSR committee, right? 135(9) says that supposing your spend on account of CSR in a financial year is up to 50 lakhs of rupees. In that case, you don't have to set up a CSR committee. So how will you decide? See, suppose today we are sitting in 2023-24, and if you found that your spend in 2022-23 was 45 lakhs, then you are free to dismantle the CSR committee, right? Now, 135(9) coexisted with a controversial rule in the CSR rules. Rule 3.2 said that notwithstanding, even if your liability to spend on account of CSR has ceased, you must retain the CSR committee for a period of 3 years. For the next 3 years, you will have to have a CSR committee, which again raises the question as to what will you do with a committee which has got nothing to do. You have got, when you have not got any spend, why do you need a committee? Mercifully, the high-powered committee on company law amendments, which was set up by the government under Incheti Srinivasan in 2020, they came up with the recommendation that Rule 3.2 should be removed. Now, that was not adhered to. So you had a situation where 139(9) coexisted with Rule 3.2. But as you know, when you are interpreting, what is superior? Is the act superior or the rule superior? Rules are supposed to be subordinate to the act, and rules are to be set aside if the rules are not consistent with the act. So therefore, even when Rule 3.2 existed in the rule book, it was held that 135(9) will prevail. But now Rule 3.2 has been mercifully eliminated from the statute book. So therefore, there is no question that if your CSR spend is up to 50 lakhs of rupees, you don't have to set up a CSR committee. Now, having said that, my question is that whether you have to, whether the setting up of a CSR committee should be dependent upon how much you spend. Should it be dependent on how much you spend? Because the compliances are exactly the same. Whether you spend 1 rupee or 10 crores of rupees, the compliances are the same. So I would suggest, of course, you are not going to suggest this to the board as accountants, but a company secretary, if I am asked the question by the board that, look, your spend was less than 50 lakhs last year, why don't you dismantle the committee? I will say that please don't do that, sir, because after all, profit is something which is oscillating. Now, merely because your profit has fallen to less than 50 lakhs, you don't dismantle the committee. Next year, you will have to go to the board and say, sir, let me set up the committee again. You will become a laughing stock. So therefore, my submission is that it is not correct for you to be premature in deciding the question that CSR committee should exist or not based on what you need to spend. Okay. So the decision to maintain the committee should not be allowed to oscillate depending upon the quantum of spends. Now, the transfer of the unspent amount. Now, today, see, there are four ways by which you can do a CSR, right? One is directly. You have a CSR department. The company spends money on CSR activities specified in Schedule 7. Okay, that's one. Now, there is no question of any unspent amount, because you are going to spend, unless of course you have issued some payment to somebody which is dependent on that person delivering what you want to do. That's one. That's the direct way. The second is to make a contribution to the central funds. You contribute to the Prime Minister's fund, and that's the end of it. In fact, that is the least preferred alternative, because those who introduced CSR said that CSR is not charity. CSR is not reduced to issuing a check. CSR is something more than that. You're supposed to handhold society. But all that theory is actually debunked by the fact that if you issue a check to the Prime Minister, that's CSR. You don't have to have this headache. You don't have to have an audit. You don't have to have a CFO certification. All that is not necessary when you issue a check to a central agency. The third way is to use an NGO. You use a non-profit organization because these are specialized agencies, and you pay money to the NGO, and then you expect the NGO to carry out what you have in mind. Now, the NGO is supposed to make utilization of funds for the purposes of the CSR, which you have told them according to a need, on the basis of the need. Now, so therefore, you should now be very, very disciplined where it comes to handing over checks to an NGO. You should tell the NGO, look, I will give you money only on need basis. So you see, there is a danger in doing this. Why? Because supposing you issue a check in the month of June to the NGO for 10 crores, right? The moment you issue the check, you can't debit CSR because it's an advance. It's an advance. And you will have to wait for the NGO to give you a confirmation as to how much he has utilized. So you might have a situation where the NGO tells you on 20th of March that he has spent only 5 crores. Then the NGO might say that, then you ask the NGO to return the money, 5 crores. No, NGO may say that I don't have the money. Why? Because he has subcontracted to somebody else. Can you imagine somebody like a company like TCS, which has an outlay of 170 crores for CSR? Can you imagine such a company trying to sort of narrow down to questions such as they are having CSR activities pan-India, right? Now, how do you expect them to sort of micromanage CSR spends in this manner? So there is a huge danger today by using an NGO, whereas actually that is exactly the real quintessence of CSR, because the NGOs are operating in fact, in ACC, we used to spend money on CSR on a need-based basis. And our focus was on the two themes of education and water. Maharashtra is, for instance, a state where there is huge amount of water scarcity in many, many areas, I mean, particularly the areas beyond Chandrapur, etc. We had a meticulous, mechanism by which the NGOs would identify the need for water preservation and things like that, and on that basis make a spend. So this is the third way. The fourth way of CSR is to collaborate. Suppose you want to set up a group of companies join together and want to set up a hospital, right? A hospital, 1,000-bed hospital for cancer treatment. Now, 10 companies can pool in by way of resources. Now, when that money goes into a common pool, tell me, I paid 10 crores and I said that this is for the setting up of a ward. Can I ask the implementing agency how much you have used out of my 10 crores? After all, this money is going into a common pool, right? Its money is fungible at the end of the day. So therefore, here again is the frailty of this concept of ensuring that you must get a back-to-back confirmation from the NGO as to the end use. Unless, of course, your intention is malafide. I am also aware of situations where you give money to a company, to a fund which has got accreditation under Section 80G. And 2 days after, you get the money back in cash, net of tax. That happens. I mean, particularly the one state which is famous for this is Calcutta. You know, there is one address in Calcutta, 9/13 Al Bazaar Street. It's a very, very non-discrete building, but that is where the emphasis, focus of activity on this money laundering is. There are 913 offices, registered offices of companies in that building. Now you go to the building with a check, and after 2 days you come back with cash. Now that's also an example of CSR. But here we are not here to discuss that kind of CSR. But the point I'm making is that there is a danger in trying to say that, how can can you expect TCS, which uses about little over 500 NGOs for their activities, to get a back-to-back confirmation of the spends? Okay. Now I'll spend some time, because you are all accountants, I thought it would be appropriate to discuss the concept of what constitutes spend. And I will try to prove that the law, to my limitation, that the law is very unfair where it comes to what constitutes spend as propounded by the Supreme Court in various cases. Okay. Now, the unspent amount, if you have got any amount which is unspent in respect of an ongoing project, what's an ongoing project? An ongoing project is supposed to be a project which cannot be completed within a duration of 1 year. You have 3 years, excluding the year in which the project commenced. And within 3 years, you are supposed to complete the project. Now, you can't have, this is funny, the government says that you can't have a project which is more than 3 years in age. That's not fair, given the fact that you come up with roadblocks unexpectedly. You're setting up a hospital and somebody says that you don't have environmental clearance. And the Babu in the Mantralaya says, unless you give me a packet, I'm not going to accept. Now, then your project gets delayed. Your project gets delayed for no reason of yours. If you're setting up a power plant, let me tell you from experience, if you set up a power plant in any state of the country, the number of approvals that you need under the central government is 85. So therefore, if there is one approval which gets delayed, the project is going to get delayed. And it will not be an ongoing project if the project is not completed within 3 years. So that raises the question, does the government have the right to lay down that you must complete a project within 3 years? Now, that is the fairness or unfairness of it is left to debate. Now, this is another extreme, and this has not been talked about in the fraternity. Surprisingly, 135(8), to my mind, is an extremely dangerous provision. I say this with all humility because this opens up the possibility of the central government imposing on a certain class of companies a burden beyond 2%. What does it say? It empowers. This is a enabling provision for the government, which empowers the central government to provide general or special directions to companies or class of companies to ensure compliance, and such companies shall be obliged to follow directions. That means the central government has the authority to impose certain directions, special directions for a certain class of companies. It could be that they will say that if you are spending more than 10 crores of rupees, you will have an audit every year, a CSR audit every year. In fact, CSR audit to my mind is going to happen one day or the other. So, and then they may say, if you are a class of company who's having a spend of more than 10 crores or 50 crores, your obligation to spend will not be 2%. Your obligation to spend could be 4%. So that is the power that the government is giving itself to under 135(8). And this, therefore, as I say, throws up the possibility of separate thresholds or separate regimes of regulation being laid out by the government for specific classes of companies, which I think is a very, very dangerous development, because it is it is inbuilt with danger, because there could, I see a situation where the government could be arbitrary where it comes to imposing additional burdens on certain classes of companies. Remember how much the government has mopped up last fiscal by way of, from CSR? 13,000 crores. 13,000 crores is the contribution of, you could say that it may not be in the context of, the macroeconomic level, it may not be very substantial, but 13,000 crores is very, very substantial. And the corporations have done a sterling job by way of supporting the government on infrastructure building, particularly on, during the difficult times of COVID. Have been extremely supportive of the government. So therefore, my question, I'm raising a question, I'm raising a thought in your mind that 135(8) could be the harbinger for a separate code being introduced for companies of varying size. Okay, that's something which you need to be wary. Tomorrow, don't tell me that this will come. They will do so under the guise of 135(8). Now, the set-off, there is a concept of a set-off, when you have, like you have in the income tax law, you have got, extra payment of advance tax. There is a facility for a set-off and a carry forward. Similarly, there is a concept of a set-off which has been introduced in the law, whereby if you are spending more than what you are supposed to, if you are spending more than 2%, then that extra spend you can carry forward to the next year. But the carry forward facility is available only for extra spends that you have made from financial year 2021. If you have got some carry forward on account of earlier years, you are not allowed. 2021, suppose you have got extra spends, that money can be carried forward, and the carry forward is restricted to 3 years, not beyond. So that is one facility which, kind of helps you to ensure that you need to spend only 2%. Okay. And, next year you could probably spend 1.9% and use up that extra amount and say you spend 2%, right? Now the law says, 135(5) says that you must provide preference. The company should give a preference to local areas of operation. What does local area of operation mean for a company which has got a pan-India presence? You see, Hindustan Lever, or for that matter, ACC, which has got plants all over the country, there is no local area of operation. You can't have, unless you are a single plant or a company which has got a ICICI Bank. It's got a global, it's got a national presence. So the intention is that, the question is that you are not supposed to only restrict yourself to local area of operation. You can do beyond, but because you are originating from a particular state, you are supposed to give a preference to the local area of operation. Now, if there is a failure to spend, as I said, there is a penalty under 135. Apart from that, if there's a failure to spend, you as a board is supposed to report in your director's report as to why you failed to spend. If you do not make that explanation, failure, if you do not explain why you could not spend the money, then under 134(4), there is a separate penalty. Your director's report will be held to be incomplete. So please understand that it's a sword that cuts two ways. If you don't spend, you have a penalty under 135. If you don't spend and do not explain why you did not spend, you have a penalty for failure to explain under 134(4). And these both the penalties operate concurrently. Okay. Okay. What happened? Hello? नहीं चल रहा है. Low battery.
रिकॉर्डिंग चालू है.
चालू है.
चालू. चालू.
Yeah, रुकावट के लिए खेद है. You know, you found this very often. I was watching this, not that I watch, now I'm a retired man. I was watching a lot of IPL, particularly on this Geo. You know, there's so much buffering that you start involuntarily rolling your head. Okay, so the spend, you know, there is this facility of a set off and carry forward, which is only available for spends, excess spends from financial year 2020-21. Yeah. इससे ही कर लेता हूँ यार, होगा. Not my fault. Easier यार, ये आप एक काम करो, इसको मैं क्लिक करता हूँ. हाँ. Okay. What about the amendment to the rules? The rules have been amended, as I said, very substantially in January of 2021. The question is that whether the first question that you need to ask, because the rules are very dangerous, you know, there are so many things which are not there in the act, which have been introduced here. The first question is that whether the rules are retrospective in application. The answer is no, they cannot be retrospective in application. As I explained that whether it is the act or the rules, no act or rules are supposed to be retrospective in operation unless the intention to make it retrospective is manifested in the intention. And secondly, in a procedural law, you can't have rules which are retrospective. Okay. Now, let's talk about administrative overhead. When you are spending money directly as a company, I explained the 4 mechanisms that you can use for CSR. When you are spending money directly, you have a CSR department, you have a CSR head, you've got a team of people that are working. Now, those people are supposed to be paid money for what they are doing by way of salary. Now, those are considered to be there, and there are several administrative expenses that you incur for the purposes of CSR, doing CSR activities directly. Now, the law provides that administrative overheads are supposed to be capped. The administrative overheads are supposed to be capped to an amount of 5% of the total CSR cost. So if your administrative overheads are more than the cost involved, more than 5%, then the difference will not be allowed as CSR. Okay, now what about the salary of your employees that are in the CSR department? Now these, to my mind, those who are field workers engaged directly in the project, the costs of their employment will be directly debited to the cost of the project. But if there are certain people, like, in accounting, you have this concept of direct cost and indirect cost. There is a CSR manager who is responsible for a host of projects. Then you have a concept of appropriation as opposed to allocation of costs. Okay. Now, whether if you are using an NGO, if you are using an implementing agency, are you allowed to claim the administrative costs incurred by the implementing agency? The answer is no. You can only claim the administrative cost that you are incurring directly and not the cost that has been incurred by the implementing agency. The implementing agency will again, so you see, CSR is applicable to even a Section 8 company. Inexplicably, a Section 8 company is supposed to be, if there is a profit that the Section 8 company is making out of CSR activities, and the profit is not plowed back for furtherance of the objectives of the Section 8 company, Section 8 company is also liable to CSR spends, right? Now, the difference only is that the Section 8 company is supposed to plow back to the extent of 85%, right? And those expenses can be incurred, which are incurred by the NGO for doing CSR on behalf of others, can be considered as a claimable amount when it comes to the administrative overhead of the NGO itself. Okay. So what is not included in administrative overhead? Administrative overhead is only expenses that are incurred for general management and administration, right? And you cannot, as any cost that is incurred directly for a CSR project is forming a part, like for instance, there's a design. You set up, you pay some money for designing a CSR project or designing a building for a hospital, right? That is a CSR cost, not an administrative overhead. The definition of CSR is given now under Rule 2(1)(d), and CSR is defined negatively. The rule does not define what is CSR. Of course, we all know that CSR is supposed to be activity related to all items which are laid down in Schedule 7. But Rule 2(1)(d) defines it negatively to say that if it refers to activities which are undertaken by a company pursuant to the statutory obligations imposed on the company under Section 135. But it does not include, what is not CSR? It does not include activities which are pursuant to normal activities of the company. Now, what is normal activity? Can you define under law what is a normal activity? In other words, the expression normal activity is somewhat analogous to ordinary course of business. You come across this expression in the case of related party transactions under Section 188. Now, what is normal? Normal cannot be defined. I mean, because as Einstein said, normal is something very relative. What is normal to you may not be normal to somebody else. Like he explained theory of relativity in a layman's language, which somebody like a duffer like me can understand. He defined theory of relativity so beautifully. He said, what is relativity? Suppose you touch a hot stove, you touch a burning stove or a burner for 20 seconds or less than 20 seconds. What happens? It gives you such a sting that it lasts for more than an hour. Right? But if you spend time with a beautiful lady, you spend 1 hour with her, he says that feels like a second. That's relativity for you. Okay. So therefore, normal is something which is normal to the business. That which is which a company is supposed to do every day. You sell cement every day. That's just normal activity. The normal for you to hire people, normal for you to spend money on account of marketing. So these are any activity which is normal cannot be considered as CSR. Like for instance, in cement companies, there is this, habit of pampering the dealers by taking them on various tours, etc. In fact, the cement companies did a lot for the dealers during COVID. They arranged for the COVID vaccine, they arranged for the patients to be taken to hospitals, etc. Now, can that be considered as a CSR activity? The question that arose was whether you could consider it as CSR. The answer is no. Well, that's normal. You're trying to take care of your dealers. They are your marketing channels and you're trying to protect them. That's not CSR activity. Similarly, you are setting up a power plant, right? A power plant requires huge amount of land, okay? And you acquire land from, like it happened in West Bengal when Mamata Banerjee stepped in Singur, when the Tatas were setting up the nano plant. She said that now people are going to be endangered. They are going to lose their jobs, etc., etc. Because they're going to take away precious fertile land. That was the acquisition. Okay. But what happened? That was not fertile land at all. Okay. It was land which could be used only for industry. But Madam Mamata Banerjee wanted to play a politics. And the land went to Mr. Narendra Modi offered land in 3 days. And you have you look at the downstream development that has happened in that area, Sanand, where the plant is. Today you go to Singur, it's a town, it's a ghostly town. Ghostly town, people are only spending time on gambling. Now, so that's an example of a politician ruining the infrastructure of a state because of certain whimsical, notions. So the point is that when you are taking land from the locals, you are supposed to rehabilitate. In fact, the Tatars had offered that each person who gives land will be given a job. Now, that could not be considered as CSR because it's a R&R obligation, rehabilitation and redevelopment obligation. You can't, therefore, anything that you do under a statutory obligation cannot be considered as CSR. So CSR is something which is supposed to be voluntary. And that which is, so I have explained what is normal. Normal is something which you will have to understand from its application in common parlance. Now, there's a transitory provision for CSR, for COVID vaccine research. And that sunset clause has already happened. 22-23, up to 22-23, any research for COVID-related activity could be done and claimed as CSR. Now, today,
the activities, if you want to fund CSR through institutions, this has to be through institutions which are laid down under Schedule 7. These must be named under Schedule 7. And of course, for the transitory period, if you are spending money for COVID, then you have to explain to the board, in the board's report, you have to explain the utilization, and you can't do any activity with regard to CSR outside India. Supposing your company is supporting the earthquake victims in Turkey, you can't claim it. But the only exception is given to if you are spending money for the development of sportsmen who are representing the country or your state, and they are having to take training under, in better foreign locations, then that can be considered. Like, for instance, JSW is sponsoring the, the training activities of Neeraj Chopra. Now, that can be claimed as a CSR spend. So, if you are spending money for development of sport within the country, or for development of certain athletes who are representing your state or your country in international events, that could be CSR. Any contribution you make to a political party, either overtly or covertly, you make you issue a check to the BJP, that's a clear case of a political contribution. Now, BJP comes out with a souvenir for some event. Right? Now you contribute to the souvenir by way of an advertisement. You are aware under the income tax law, under section 37, there are several cases where even an advertisement in a brochure or a tract brought out by a political party has been held to be a political contribution. So you can't do that. Okay. Now, again, activities which are benefiting employees. Suppose you gave COVID vaccine to your employees. That couldn't be considered as a CSR activity. On the other hand, if you organize the langar, if you organize the langar and your employees also join the langar, that is okay, because you have basically catered to the requirement of society first and then your employees, which is why there is this famous case in income tax law about Tatas claiming the expenditure on account of maintenance of the Jamshedpur town municipality. In Jamshedpur, in Tatanagar, it's a private municipality which is run by the Tatas. If you've gone to Jamshedpur, like I used to when I used to visit XLRI, I haven't gone after 2005, but let me tell you, when I used to go, very, very interestingly, Jamshedpur at that point of time was under Bihar. And Mr. Lalu Prasad Yadav was the chief minister. So when you took the road from Tatanagar railway station up to Tata Pigments is the first of the plants of the Tatas. Up to that point, the road was so bad that you would, even if you had the most strong back, you definitely develop low back pain. That was like that. And that was because Lalu Prasad Yadav refused to give lease of that land to Tatanagar, to the Tatas, saying that I want a money payment of 30 crores of rupees. Okay. And the Tatas, of course, would not give. But after that, it became, I think, Jharkhand was developed in the year 2004. I mean, it became a state, separate state, and Jamshedpur became part of Jharkhand. And that was the last year of my involvement in XLRA. And that particular road, Babulal Marandi, who was the chief minister, had given to the Tatas. And that road was developed into a concrete road with so much of steel. I found that in 6 months' time, kids were practicing cricket. So that's an example of corporations doing good for society. And the tax tribunal came up with this question, whether the expenditure incurred by Tatas on the maintenance of the municipality can be claimed as a welfare expenditure under the tax law. And it was held in favor because the view was that it catered to the employees. but the Tatas made out the case that it was incidental that employees got benefited. But who got benefited actually were the people of Jamshedpur. So that's an example where the law took a different perspective. Okay. So if you are doing any activity on a sponsorship basis for marketing benefits, like you sponsor the Bombay Marathon, now that's a marketing strategy. You can't claim it as CSR. Okay. But at the same time, if you give money to a hospital and tell them to buy a ambulance, right, on your account, and it is written sponsored by ACC. Now, does that amount to marketing? I think the answer is no, because marketing is something where you are focusing on, like on a Shah Rukh Khan or a Salman Khan or an Amitabh Bachchan, saying something or the other which he does not, they do not do in their private lives. So if there is incidentally an aspect of marketing involved, in that case, that can be discounted and has to be considered as CSR. Now, again, as I said, if there is land which you have acquired from the farmers and you are giving them compensation as per the requirement of the state law, that is not CSR. Now, there is a requirement of a CSR policy. The board of directors have to adopt a CSR policy, which will basically, it's an approach paper. It's a statement which will tell the board, will tell the shareholders what is the approach of the company where it comes to CSR. You could have certain thematic areas, like for instance in ACC we had 4 themes, and that was those themes guided the principles associated with CSR spend. One was education, second was development of rural infrastructure, third was development of rural roads, and fourth was rural health. Okay, so you could have principles or policies developed around specific themes for CSR. Okay, and these are only this is only a guide. There is a difference between a policy and a procedure, or this is only a guide to say that the company shall spend on these areas, these thematic areas. And it is not as if this is cast in stone. You could have variations in the policy subject to approval by the board. Okay. And you are supposed to undertake activities which are laid down under Schedule 7. You cannot go beyond that Lakshman Rekha of Schedule 7. And Schedule 7 also has to be interpreted very liberally. There is a MCA circular which says you have to interpret Schedule 7 liberally. Like, for instance, it does not talk about rural housing. It talks about low-cost housing. No, sorry, it talks about rural housing. It does not talk about low-cost housing. So if you are doing low-cost housing in rural areas, that is CSR. And the next question is that, is it necessary to change the policy every year? The answer is no. You can have a static policy, or you can have the amendment in the policy as you need, according to the need. Now, net profit, this is one contentious area where, there is some amount of debate, and I dare say some inconsistency in the law. What is net profit for CSR purposes? Net profit is the profit before tax. When you arrive at the profit before tax, it is only after that you apply Section 198. Okay, your first figure is the net profit before tax. And then you are supposed to compute the profitability for CSR purposes as per Section 198. Because Section 198 says that the directors cannot take credit for any capital earnings. So if you have made any profit on account of sale of investments or assets, you can't take credit. So your profit will have to be reduced by that amount. Similarly, if there are losses on account of sale of investments or the other, that cannot be again reduced. Okay, so look at the inconsistency here. It says that net profit shall not include the profit of an overseas branch, whether operated as a separate company or otherwise. I can understand if you've got a branch outside India and that branch is operating as a part of your own company, so that, the profitability cannot enter there because it's a contract, right? But CSR is supposed to be company specific. Suppose the branch is operated as a separate company. Say that the foreign branch is operated as a subsidiary company. How can you reduce your net profit by the profit of the branch? Because that's a branch which is operated as a separate company, I repeat. So there is a flaw in the law, a drafting lacuna is there. In that, you cannot reduce the net profit of a foreign branch if it is operated as a separate company. Okay. Now, dividend received. If you receive dividend from another company, the presumption is that that dividend received is not to be considered as part of net profit. No, it doesn't end there. It says that the dividend paying company should also comply with CSR. Look at this. I mean, so see, you are an accountant, you receive dividend, you knock off the net profit by the amount of dividend. You're wrong. You have to check with that company. My dear accountant of company A, are you spending for CSR? He says, yes, you get a certificate that we are spending for CSR. Then only you can reduce the dividend paid received by you in the, in the computation of the net profit. Look at the narrowness which goes into thinking. I mean, you're doing one hand a service to society. At the same time, you're being so very short-sighted. You always suspect that this guy is a black sheep. That is the bane of thinking where it comes to legislation in this country. I'm sorry, I'm very outspoken. In fact, I should have made my disclaimer in the beginning. What I say is my personal view, and I'm not a big sheikh for anybody to quote me, but I speak from here. I don't speak from here, which is why I always, sort of go beyond the realms of, I wouldn't say decency, I'm decent, but I'm very hard-hitting. That's why a lot of fora do not want me, especially if they are inviting, government officials. They don't want me because I'm inclined to. Once in Calcutta, I raised a question with Mr. Chidambaram on this. You had that fringe benefit tax. I raised a question on FBT. He was addressing the Calcutta chamber. He didn't answer the question. He said, "Who are you?" So I kept quiet. Okay. So for foreign companies, please understand, CSR also applies to foreign companies that are operating in India. And the profit for the purposes of a foreign company will be the net profit as computed under section 381(1). Okay. Now, ongoing project, I explained that it is supposed to be a multi-year project undertaken by a company. And the timelines are not supposed to, I have another 15 minutes. Right, okay. The timelines for a project ongoing is not supposed to be more than 3 years, excluding the year in which the project commenced. So, if so, how do you call it multi-year? So that means that your project has to be only 3 years. It cannot be more than that. Now, firstly, the question is that how does the government decide? If I'm doing a hospital for 2,000 beds and I'm going to have so many facilities, the chances are that I may not be able to complete the project. Again, here there is a suspicion that this guy will do something wrong if he's given more than 3 years' time. Okay. Now, second, what constitutes commencement? You are all tax practitioners. You will know what constitutes commencement of business in the context of tax law is a question which is decided by enormous number of legislation, right? Now, they have given certain examples of what constitutes commencement for CSR. Now, one example, they say that if you float a tender for a CSR, or if there is a groundbreaking ceremony, that is supposed to be commencement of business. But is it commencement of business? Is the concept of commencement of business so simple? Because there are questions in the tax law where it comes to depreciation. You know, if you claim depreciation on trial run, the questions have been asked in tax assessments that whether the depreciation on machinery used for a trial run is claimable. Now, there are so many questions like that. So similarly, if there is an issue of a work order, it is supposed to indicate commencement. Award of contract for execution or a groundbreaking. You have a groundbreaking ceremony for a project that's supposed to be commencement. Okay. Now, if the project length cannot be more than 3 years, but if the board conceived of the project as a 2-year project, the board has the facility to extend the duration of the project by 1 year. You can't go beyond 3 years. Okay. Now, the question, therefore, I'm asking is, why should a project not be longer than 3 years? There are no answers. And what about potential roadblocks? Like I explained, the one fellow in the Mantralaya says, unless you give me a packet, I'm not going to give you a NOC, right? And you wait either indefinitely for that guy to retire, or you pay up and then you get going. Now, CSR is, as I said, you can do directly or through an implementing agency. You can do it through an implementing agency, a Section 8 company, or a registered public trust. You can be the implementing agency can be a Section 8 company or a registered public trust or a registered society, which has got accreditation under Section 12A, and it has got ATG approval also. And you know, there can also be, the government is also talking about a Section 8 company which can be set up under an act of parliament. So you could tomorrow do CSR through a company which is set up by the government under an act of parliament. Okay. But if you are engaging a NGO, if you are engaging an intermediary, you must ensure that the intermediary has a 3-year track record, minimum track record. So if you are engaging an NGO which has been started only today and you want to do CSR through that, that is not permitted. That's not permitted because that 3-year track record is something which has to be ensured. Okay. So you can set up CSR through a collaboration also with other companies, like it is being done. A lot of hospitals in Bombay have been set up through the involvement of a number of companies. That is also an example of CSR, which is a collaborative arrangement. Now, all the implementing, this is of course procedural, we can skip it. All the implementing agencies that you use today are supposed to get registered under the Companies Act. They are supposed to have a registration and they are supposed to file Form CSR 1. And that is to be filed from 1st of April of 2021. And this form has to be signed by a company secretary in practice. And there has to be a unique registration number which will be generated. And you cannot, what about, suppose, can you use the Red Cross as your implementing agency? You can't use the UNESCO as your implementing agency because these are international agencies. Of course, you can take ideas from them for your CSR, but you cannot engage them as a implementing agency. And you can't, of course, have any project collaboration with an international agency. Now, CSR, as I said, can be collaborative. And if you are collaborative, in that case, you should have a mechanism by which you are able to identify what is the spend out of your contribution. Otherwise, you'll have to transfer it to expenditure which is unspent, amount which is unspent. And the board has to get a periodic assurance. The CFO has been made responsible to provide a certificate to the board on a periodic basis. Ideally, it should be a quarterly basis by which the CFO confirms that the money which the board has allotted for CSR is being spent appropriately for the purposes that the that the company had in mind. Now, what about the CFO of TCS? Can he give a back-to-back confirmation for all the projects that are being implemented through the host of NGOs? He can indeed depend on third-party authorization. He has to. How does he get to know about CSR activity in Mizoram unless he gets a certificate from a chartered accountant there to the effect that the end use is proper? Okay. And the board has the responsibility to monitor the ongoing projects, and so that, you know, there is these are projects are being the project milestones are being reached, and you should be stingy where it comes to release of funds for CSR. Ideally, to my mind, what you should do is that you release money in the month of April, right? Don't give any money to an NGO beyond December, because in that case, you'll have a 3-month cushion to find out whether the NGO has used the money properly or not. Okay. You can have mid-course correction in a project also by the board. You can extend the project scope or you can curtail the project scope depending upon what the board wants to do. Now, CSR committee responsibilities, I mean, I think this is not necessary for you. I mean, these are the lists of, it has to have a list of, you have a mode of execution, the modalities for determining the fund use and the implementation schedule, etc. We can skip this. Now, Rule 6 says that CSR, I mean, Rule 6 has been deleted. Rule 7 says administrative overhead is capped to 5% of the total expenditure for the year. And the surplus, if there is a surplus on CSR activity, say, suppose you have unspent money, right? And you put that unspent money into a fixed deposit account and you got interest out of that. Can that be considered as part of CSR? No. Like in bailment, if you give a cow on bailment, if the cow gives birth to a calf, the calf also goes to the bailee. Similarly, there is any accretion to money which is given ostensibly for CSR, that will form a part of surplus. It has to be plowed back to the project. So surplus on CSR cannot be considered as part of business profit. And the surplus on the CSR has to be either plowed back to the same project or it can be transferred to an unspent CSR account and spent in an approved project as per the plan. If you have got any unspent amount on account of an ongoing project, you're supposed to transfer that money within 1 month. If you do not have any, if you have an unspent amount which is not specific to a project, you're supposed to transfer that to an unspent account for the purpose of within 6 months. And you're supposed to use that money within 3 years. Otherwise, you're supposed to transfer it to a government fund, like the Prime Minister's fund. Now, use of excess funds, excess spend may be set off, may be used if you've got an excess payment. If you've got an excess spend, you can use it for a set off against your future obligations. And the excess, of course, shall not include any surplus emanating from a project. And the board has to decide how the surplus will be used. Either the surplus gets used for a specific project or for a new project or for expanding the scope of an existing. Now, transfer of CSR assets. See, typically, any asset of the company which you use for a CSR project, you cannot claim depreciation. You cannot claim depreciation, but it is easier said than done. There are huge amount of issues around transfer of assets to a CSR body or a CSR company. Like, for instance, land. If you've got land, if you want to give to an NGO, right, transfer it, then you know there are problems under Section 50. If the value is lower than the market value, then the income tax officer has the right to substitute the market, substitute the consideration by the market value. Similarly, in the hands of the recipient, it tantamounts, I think, to dividend income under Section 56. If my memory serves me right, I did tax law about 10 years ago. I don't remember. Law has changed hugely, so I don't know whether what I'm saying is right. I shouldn't be hitting a self goal with people like you who are accountants and by profession. So there are issues associated with transfer of assets. And to my mind, all this says that the best way to do CSR is, regretfully, the best way to do is to issue a check to the Prime Minister, right? Don't buy headaches by, transferring money to an NGO or the other, because you don't have the Modi Sahab, sir, aapne kharcha kiya kitna hamara, aap ask, can you ask him? No, you can't. So therefore, that's the best way. Unfortunately, that negates the basic concept of CSR. Okay. Now, let me also, I'll come to expenditure just after this. Impact analysis. When you are doing a project which has got a value, which has got a spend of more than 1 crore, and if your total CSR spend is more than 10 crores, you're supposed to have an impact analysis. Like, for instance, in ACC, we did a lot of projects for the water conservation and preservation and rainwater storage in the drought-prone areas of Maharashtra. Now, we used to have you need to have an impact analysis. But what is the purpose of an impact analysis unless you are firstly asked to do a need analysis? You will first do a need analysis and find out whether it is necessary for you to spend money in this area. There is no provision for a need analysis. So it's like putting the horse before the cart, or rather the cart before the horse. Okay. So the need analysis, to my mind, is a requirement that should precede an impact analysis. Otherwise, it's half-baked, right? And the need analysis, for the impact analysis, you can make a provision. Your impact analysis cost cannot exceed 50 lakhs or 5% of your CSR spend. If you spend more than that, you're not allowed to claim that as a part of CSR expense. And there is a requirement for displaying your CSR activities in your website under Rule 9. Okay. And the activities apart, you are supposed to give the composition of the CSR committee, the CSR project, what are the projects which have been approved, etc., etc. Now, the board's report will contain an information as per Annexure 1 or 2. That Annexure 1 is for those which preceded the rules. Annexure 2 is now. And impact analysis, as I said, applies if your project is more than 1 crore. And there is no sanction for a need analysis. I'm raising this question. Now, transfer of unspent CSR fund rule, if it is not for a specific CSR project, you are supposed to transfer it to a bank account. And if you are not using it, within 3 years, you are supposed to transfer it again to the government. Government is very happy to receive any money, rest assured. Okay. And the report of on CSR has to be certified by a company secretary in practice. Now, let's come to the last module of what I wanted to say. I wish to spend a little time on this. What constitutes spend? We are all, I'm talking to accountants who are more qualified to answer this question than me. Spend, the term spend is analogous to expend, right? You can have fun at my expense. You can ridicule me for saying that I'm a fat man. I'm an old man blabbering illogic since morning. That's one way of spend, right? The other is expenditure, right? What is expenditure? Expenditure, as per the Supreme Court, I think I've written this. Yeah, in the case of Indian molasses, the Supreme Court has beautifully explained what constitutes expenditure. To expense means something gone irretrievably, right? And expenditure is not reduced to what is actually physically spent. If you incur an expenditure, you also incur an expenditure by booking a liability against which you are going to make payments in the future. Now, that is what we understand as expenditure as per the accrual concept. And the law clearly says that accounting by companies has to be on accrual. Okay. So here you have a situation where they say that if you have some unspent amount at the end of the year, that has to be transferred. That means that clearly you are adopting the cash basis of accounting. Am I right? Okay. Now look at the other explanation for expenditure in the Supreme Court. Expenditure includes, I quote the Supreme Court on this, liability in presenti. Liability in presenti, although the payoff is in the future. Okay. So therefore, given the explanation given to the term expenditure, what is spent is actually not restricted, not supposed to be restricted to what is issued by way of a check. Unless, of course, your intention behind CSR is malafide, and it is somewhat similar to what I explained, what happens in Lal Bazaar Street in Calcutta. If your intention is not that, you're supposed to be spending for society. So therefore, tell me, if I'm using an NGO for CSR activities, I can't book on CSR until the NGO tells me that out of 10 crores, he has spent 9 crore 99 lakhs. Only when he gives that certification that I can reverse that liability or reverse that advance and call it CSR. So and suppose the accountant, the NGO says, I spent only 5 crores, but I can't give you the refund of 5 crores because I have given it to certain upfront NGOs to whom I have subcontracted the job. Then what do you do? What do you do? This is actually double whammy. You will be punished not only for the fact that they have got an unspent amount, and secondly, you will be punished for not also utilizing you're transferring the unspent account to unspent money to an unspent account. So it's similar to you're being hanged for twice for the same offense, right? Now, to my mind, this is very unfair. And this is also iniquitous from the point of course, law has no equity, as they say, but truly this is an iniquitous position when I have the softer remedy of transferring money to the government of India. So ultimately, it boils down to the fact that CSR actually is, as we develop the concept unless the pitfalls in the law are rectified, we are increasingly going to have a situation where CSR is going to be reduced to an activity which is as simple as issuing a check and say that that's the end of my. So there are, when you contribute to PM CARE funds, it tantamounts to spend. I don't have to answer any questions to the auditors. I don't have to answer any questions to my board. Okay. So we are therefore, and one more thing I wanted to say is that can spend be in kind? CSR, the question is whether the spend can be in kind. Suppose you give to a hospital an ambulance. Is it CSR expenditure? The FAQs issued by the MCA says that CSR cannot be in kind. CSR has to be in cash. That means you issue a check to the hospital and tell them to buy a hospital. That's buy an ambulance. That's okay, but you can't give them an ambulance. Now, this actually contradicts the MCA's affidavit. There's a very interesting case which came up in the Delhi High Court in the case of Muhammad Ahmed versus the Union of India. MCA gave an affidavit in this case. Here, this is a case of a young boy who was suffering from cancer, a terminal cancer, and one of the drug companies gave all the medicines and said that this is CSR. The MCA gave an affidavit in the Delhi High Court to say that this is CSR. So how do you say that in one case you say that spend in kind is CSR, and in the rules you say that it is not, if you spend in kind, it's not CSR. Which brings us to the question whether the circulars or the Q&As issued by the MCA carry the force of law. Does it have the force of law? You are aware under Section 119 of the Income Tax Act, the Central Board of Direct Taxes has the authority to issue circulars which are intended to ameliorate the sufferings of the assessees. And these circulars have the force of law. Benevolent circulars, I think, has been held in Bajaj Auto. Benevolent circulars carry the force of law. The question is whether an MCA circular has a similar mandatory binding force. Now, this question came up in the Supreme Court in the context of one circular which was issued by the Department of Company Affairs in 2007. Old timers will remember that there was a circular of the MCA, Department of Company Affairs, which said that if you want to capitalize, if you want to issue bonus shares, you cannot use, private companies could not issue bonus shares out of revaluation reserve, right? You couldn't, but a lot of companies did it. Mind you, I have got a list of about 10, 15 companies which are today public, but if you look at the promoter holding is substantially less in cash because they transferred the revaluation reserve and issued bonus shares to promoters. Now the question is, this question came to the Calcutta High Court, and the peerless raised the question that whether the circular by the department has mandatory force. MCA, the Calcutta High Court held that no, these cannot have legal mandatory force. At the very most, these can be considered as advisory. And the matter went to the Supreme Court in Bhagavati Developers versus Peerless, where the Supreme Court held the MCA circulars can only be advisory. But what happens if an SSC takes advantage of a circular, if it is not consistent with the Act? Then the court held that you will take advantage, you will be allowed to take advantage because the assumption is that that has been drawn within a scheme under the Act. So MCA circulars do not carry the mandatory force as much as the circulars of the Department of, the Central Board of Direct Taxes under Section 119. Now, this is, some points which are for the company secretary. All implementing agencies are supposed to be registered by 1st of April. And then there has to be a display. Updates are also, you have to transfer the unspent amount. These are the obligations that a company secretary has to do upon the introduction of the new rules, right? This is not so much important. So the concluding musings, I'm entitled to my musings. CSR has become too legalistic, as you can appreciate. The focus is more on compliance as opposed to positive contribution, which is unfortunate because it's a case of missing the wood for the trees. We always do that. We miss the trees and we pick up the woods and say this is CSR. Because somebody has not issued a circuit certificate, the ROC slams the penalty. Now, so the government stand on spend is also very contentious because, I have explained my logic or the illogic of spends. What do you see in what I crystal gaze on CSR? And I find that increasingly companies will avoid direct contribution. They will avoid direct intervention and take to the easy route of contributing to the government. And you're going to have a very important area of practice for chartered accountants. An audit for CSR is bound to happen. Okay. And posterity, of course, will decide on the desirability of changes in the law. Thank you. If you have any questions, I'm free to ask. Yes, please. Accounting treatment in the case of demerger, that I'm not able to answer because see, I'll take the other question also. I'll answer. Yes. Sorry? Yeah. Yeah, like Tata's have Tata's Foundation, yeah. Good question. Good question. There is a restriction. If you are contributing a trust and the trust is controlled by your directors, the contribution to a trust cannot exceed 25%. So that's a provision in the law whereby the trust cannot be allowed to be used as a vehicle for abuse. So if there is a company which has got a, it's like it's like two faces where you wear the corporate wheel. Here also, if the trust is an abuse, is a vehicle for abuse, that's not allowed. Okay. The second question. No, if you contribute to an agency which is not having a track record, which is not registered, then that will not be considered a CSR. It has to have a proven track record of 3 years. So you'll have to wait for that agency to complete 3 years, then only use it as an implementing agency. Corpus donations are not encouraged. No. If you contribute to the corpus, it's been clarified in the FAQs that a corporate donation cannot be considered as CSR. It has to be for a specific objective purpose. Okay. And you had a question on demerger. Demerger, to my mind, is very similar to amalgamation, isn't it? So if there is any CSR spend on account of a demerging company, the demerged company, to my mind, I can't answer this better because I don't know the law from the standpoint of income tax law, but the demerged company should get the benefit of the CSR spent by the demerging company. Right? Yeah, the lady had a question. Yes, please. Yes, sir. Yes, sir. Yeah. Yes, sir.
So what happens in this case?
Then in that case, it will not be, you see, as I said, this is the unfairness of the law. The hospital does not take place, then you are not so, whatever you have claimed as CSR in the earlier years will have to be reversed back to the extent. Yeah, I agree with you, sir. I quite agree with you. That is the point I'm making. See, the agency will say that I spent money for civil work and I paid money to X, A, B, C, Y, right? And how do I recover the money? That's exactly the frailty in the concept of the law. That is the danger that the law is giving rise to. Yes, yeah, the lady. I'll take the question. Yeah.
Can I just answer?
Yeah.
I request all the participants to please keep sitting for the next 5 minutes. I also have a few important announcements to make before the break.
Reduction of dividend. Complied with CSR.
Yeah, of course. As I explained, the dividend paying company has also to be CSR compliant. So if you want to reduce your net profit by the amount of dividend received, then you'll have to get a certificate from the dividend paying company. That's okay. That's okay. If you see, please understand, merely because you are a listed company does not mean that you are going to be CSR compliant. Suppose your net profit is less than 5 crores. Then you don't have to have CSR. So therefore, if your profit is less than the threshold, you may not have CSR obligation, and yet you may declare a dividend. For instance, it could be a 100% subsidiary. Okay. So the point is that you must get a confirmation that the dividend paying company has complied with the requirement of CSR obligations. Yeah. Yeah. Yes, that in fact, I was wanting to discuss this. The only way by which you can claim any deduction on account of CSR spend is one, under section 35. If you have got spend for any research, etc., there are so many hosts of activities which are laid down under section 35. If you are spending, if you are making contributions to these agencies, etc., in that case, it is a direct expenditure which is claimable under the head business income. But where it comes to donations made to agencies which have a benefit of deduction under ATG, to my mind, ATG is a deduction under Chapter 6A, right? So when you claim deduction against a contribution made to an agency which has got accreditation under ATG, as far as I am aware, when you are making the computation, you start with net profit and you add back the contribution made, and then you claim the ATG depending on whether it is 50% or 100%. It's the only way. Otherwise, CSR cost cannot be claimed as deduction under section 37. The gentleman there. Sorry? Of course not. Of course not. Unspent amount, how can they? No, ATG, how do you know? No, again, I come to this question that the easiest way is you spend money you pay contribution to the government. That's the end of it. You are supposed to assume the government has spent. Charitable trust, yes, that raises the question that you'll have to get a back-to-back confirmation. But the easiest way is to pay to the Prime Minister. Yeah. That depends on whether you have by then closed the accounts or not. That is why I'm saying you have to have an internal financial discipline. In fact, I told the same thing in L&T, CSR, L&T. I spoke to the L&T team, CSR team. I told them that please have a procedure by which you don't pay any money to a NGO after December. So suppose you are getting your confirmation in June. I like this funny thing, this MCA circular Q&A came in August. Of 2022, if I recall correctly. By then, companies had already, listed companies have to have their annual report and account AGM within 5 months. They said that if CSR, if there is unspent money, you'll have to transfer. Tell me at that point in time, August 21 of 2022, how is a listed company going to comply with this? Requirement was not there. Earlier on, you contributed to an NGO, you claimed it as a CSR, whether it was spent or not. Now it is there. So therefore, you'll have to have an internal discipline by which you have to be very stingy when it comes to release of money. So be stingy, don't release money beyond what is required, and keep your control over the NGO in such a manner that you keep asking for confirmations. That's the only way. Yeah, the gentleman there. Yeah, okay. Firstly, land, of course, is not depreciable. So there is no question of depreciation. But the land has to be transferred to somebody. You will not transfer it directly to the farmer. No? You will transfer it probably through a trust or through another company. You transfer, okay? You transfer, but then you be wary of these questions that will come. Firstly, Section 50. Whether you are transferring, somebody will say that the circuit valuation is X, you have transferred at Y. So the difference will be taxed in your hands as capital gains. Or the difference will be taxed in the hands of the recipient as income under Section 56, right? So you can always transfer land. By all means, it will be considered as CS, but it can't be considered as, now the question is that whether that itself is CSR is a matter of debate, because you cannot hold any fixed assets for CSR activities. Of course not. Transfer is a must, no? Yeah. One more question I can take, otherwise, yes, please. Sir, yeah.
If I was sense first, expenses, like the negotiation with the company for CSR.
Yeah, it's okay, it's okay, it's okay. It's not that the contribution, see, as long as the contribution is received during the year, it's not that, I have the money, I have the necessity to spend, I spend upfront and claim it. That's okay. Thank you so much. It's been wonderful talking to you. I end with only one small anecdote. I always ask my audience at the end of it whether I have made sense or nonsense. And there is a story behind it. When I was in B school, there was a friend of mine who was my colleague. And that was the time Sushmita Sen had won the, Miss Universe award. And this friend of mine also happened to be a Sen. So he proclaimed in the class, look, only the sense of the word makes sense. Others are nonsense. Thank you.
Thank you, sir. It has been a wonderful session. So before we propose a vote of thanks, I have a few important announcements to make. The first being, there's a startup fair by the ICI that is being held on the 26th and 27th of June at Geo World Convention Center. It is a one of its kind event where there will be a lot of seminars, exhibition, pitch sessions, Shark Tank sort of sessions for startups. So startups will be coming in, the investors will be coming in, chartered accountants will be coming in, and people from all over the country are participating. It is a big event, more than, I think, 8,000 people expected to attend. So anybody who is interested in going can please register on the website. I will share the details in WhatsApp groups either today or by tomorrow. There is a delegate fees that needs to be paid if you want to attend all the seminars and the various things that are happening there. But for the exhibition center, there is also a visitor pass that you can avail, which is free of cost. So I would request everybody to at least go and visit, have a look what is happening there. You will get a broad perspective on this new area that is very upcoming. And details will be shared tomorrow. Also, another announcement is on the membership fees part. Any member who has not paid the fees is requested to pay up, like we had kept a date of 31st of May for a concessional fees. We've extended that till 15 June because I was told that a lot of people had gone on holidays and they've skipped the payments. So any of you who has not paid are requested to pay, and also inform your friends and other members who have not paid to pay. Also, you can ask your other friends who are not the members to become members, and then they can join the study circle. Another important announcement that I have is Winman software, which is supposed to be best in class. We had approached them, and I had approached them for providing software to our study circle members at a concessional rate. After long negotiations with them, I have got an offer from them wherein they will be offering new licenses at a discount of 50% for 1 year. But it is only for the new licenses, and they will be giving this discount if I can get more than 25 licenses from the study circle. The request has to be routed through us. So I will be circulating a message on a Google form wherein I would like to invite your responses if you want to avail of this new license of Winman. I think there's also an offer from them if you are currently using other softwares, but you want to switch over to Winman. They will be providing I think they've offered a free license for the next year. For this year, you'll have to pay. So any of you who's interested in availing this benefit can contact me. Also, if you are interested, you can get your names noted with Navnath outside. And the details I'll be sharing soon, either today, tomorrow, or by Tuesday, I'll be sharing. So that is all from my side. Also, the breakfast today has been served in the hall beside because I think there was rains. So it has been shifted to the Emerald 3 hall.
case anyone is interested in my PPT, kindly circulate.
Yes, sir. Yes, we will circulate. We will circulate. Now to propose a vote of thanks to our today's speaker. To our speaker, I would like to call C. Vijay Jaiswalji, our deputy convener. Thank you, Purvi. So, as the great leader, Sir Winston Churchill, he has said that the price of greatness is great responsibility. So great companies have a great responsibility, which in the business world is corporate social responsibility. So thank you so much, Kalidas sir, for taking us through the various technical aspects of CSR, its background, applicability, opportunities in this field we can take as professionals. Now he gave his valuable insights, which he has gathered in a long and illustrious career, and which proved to be quite interesting. So friends, learning is a constant process, and I'm sure this morning our members have learned quite a few new things and become aware of CSR, its applicability, mechanisms, amendments from time to time, implications of non-compliance, etc., where we can exercise our knowledge and create value for our clients. Thanks to all the members who have attended this session in large numbers, and of course the staff and management of Kohinoor for good arrangements. Now, as a token of appreciation for our learned faculty, CS Kalidas Ram, I request you to please carry along. So we will take a break, very short break of 15 minutes and reassemble here for the second session. Our next speaker is already here, so I request you to please be quick. Thank you.